Good morning, everyone, and welcome to the video analysis of the American markets, specifically focusing on the S&P and Nasdaq futures. The Nasdaq experienced a slight setback between Monday and Tuesday. Let's say took a breather until yesterday when in the pre-market session in the US, it started to push upward with strong buying pressure, a very significant, very impressive force from the buyers. In fact, from the lows around the 570, 580 area where it bounced off the dynamic level of our vol analyzer, which we'll look at later. From there, it bounced back, the market picked up again, and in about an hour by around 4:30, it reached the 800 area where it basically stayed between 800 and 850 for the entire session without ever really moving from there. The Standard & Poor's, as you saw in the other video I made about yesterday's trade, experienced a very significant absorption on the way up. So the market wanted to reach the February highs, and it did so this morning during the overnight session. So these are markets that seem to remain very, very strong. Today will be the real test as we have the non-farm payrolls. The non-farm payrolls are being released earlier than usual. They typically come out on the first Friday of the month. But since tomorrow is Independence Day, the non-farm payrolls will be released today while the markets are open. So today we'll see what happens with the non-farm payroll data. In the meantime, yesterday, a not very positive figure came out regarding US employment. They were expecting more than 110,000 new jobs. Instead, the number came out negative by about 30,000 jobs. So it's something that will, let's say that even though the data, when you look at it under the microscope, was a bit mixed. On one hand, manufacturing was up. On the other, things like legal consulting were down, as well as hospital services. So it was a mixed result. On one hand, there was negativity, and on the other hand, there was positivity. Overall, of course, it was negative, but still it was a mixed result. So that's something to consider as well. As for Europe, yesterday we saw the pound and gilts take a big hit downward due to Starmer's internal issues with the British government. So with the tax reform, basically a shortfall in revenue. Basically, there's a bit of confusion in the UK. So if you're interested, go check out the details. But that's the situation. On the other hand, this morning, fortunately, a good figure came out, the PMI, the UK PMI, which was expected at 51.3, but instead came out at 52.8. So it seems like the economy in the United Kingdom is regaining some strength. So somewhat mixed data. Today, of course, we'll have the non-farm payrolls, and we'll see. All right, now let's move on to our volume analysis and try to understand what scenario might await us for today. And as far as the end of the week is concerned, since today we'll be closing out the week, I also want to remind you that the markets, the Globex, will close early, and it will close at 7 p.m. European time, which is noon, so 1 p.m. New York time, noon Central time, okay? So 7 p.m., 7 in the evening, Globex will close. So be careful, because at that time there will be an early close. All right, as for our charts, let's take a look at what's happening. You can see that yesterday, as I mentioned earlier, as I said before, you can see how the Nasdaq, this is the long-term, or rather medium-term VWAP that has been in place for quite some time. You see, it basically starts from the 23rd of June and underpins the entire upward trend. And you can see how the market yesterday bounced perfectly off the VWAP. It's a very powerful tool in the sense that, of course, it's not a crystal ball, as we all know. That doesn't exist in the stock market, but it's definitely an excellent tool to at least identify a potential target level, okay? And potentially also for reversals if in the end there is volumetric evidence that can confirm this for us, okay? So yesterday the market reacted exactly at the VWAP. Moreover, yesterday, as you can see, it reacted twice on the lines on the vol analyzer area, which indicated important support points for us. And here it is. And yesterday it reacted again, plus it was also crossing with the VWAP. So there were two important confluences that could suggest there was a reversal point there. As for the areas of interest, now that we've created the vol analyzer, let's pay attention to the 22,700 area and of course to the 22,800 area. The short-term dynamic VWAP also passes through here, so be very careful today with the non-farm payrolls. We need to be a bit careful because, as we know, with the non-farm payrolls, the market becomes extremely volatile. So these levels should always be considered with great caution, since with high volatility, we might see a level being broken and then retested again. So these are levels to keep in mind right now, specifically the 22,790 area, 22,800 and 22,700, but always bearing in mind the high volatility triggered by the non-farm payrolls. From the point of view of the weekly distribution, we still have, in any case, it's still a distribution situation. And as you can see here, the market is clearly and openly accepting this area between 22,650, 22,600 and 22,900. So the market is generating large volumes here. And when there's acceptance in an area, we know that from there, the movement will start with a fairly significant impulse. So we need to be careful, because if the goal is to break the all-time highs, as it really seems, since the market reacts very strongly and decisively to every short attempt, at the moment the trend is long, the evidence we have in the market is always long, because even yesterday the market, the Nasdaq, started with explosive strength, with impressive buy deltas, let's say, really strong longs. So at the moment, everything suggests that there will be a breakout of the all-time highs and that the market could then continue to rise for another period. So for now, this is the situation as far as the Nasdaq is concerned. As for the S&P, the situation is basically the same. You saw the video I made for you yesterday. Yesterday, we really saw an impressive rise from 6,250, slow and relentless, those 10 points, which are just 10 points, but they were fully achieved. You can see here how much short kept coming in on the delta filter bars very heavily, but all those shorts were constantly absorbed. At the close, there was this strong absorption. You can see here on the other side how the close has. Yes, but the close is always something to keep in mind, though, always with a question mark. Anyway, one thing is certain, a lot of long positions came in at the close, because you can really see here that we had significant long push bars towards the close, but the 6,280 level was practically absorbed. So we'll see, because the market hasn't exited yet. Let's say it hasn't made the classic typical explosion of a market that absorbs so much and then takes off, because from here we've only gained about 10 points. So I imagine that all these shorts inside here still need to be covered. So be very, very careful, because there hasn't been, let's say, the natural evolution that this kind of absorption would have predicted. So pay close attention. We can't yet say that this was an effort without results unless we first see a very significant breakout, meaning with the Standard & Poor's moving into the 6,320 to 6,330 area. Well, one thing is certain. We've already reached the first target, which was the highs from last February. Let's see where that is. Here it is, right? Well, these are our Mona Lisa zones, which show us that the targets have already been reached in the short term. The first target has been hit in the medium term, and in the long term, we still need to reach the targets. Let's see what happens today with the non-farm payrolls. Finally, as you can see here, the market has reached the highs from last February, so 6,283, where it bounced back. The historical highs are at 6,300, so we'll see today with the non-farm payroll what happens. Well, with that said, all that's left is for me to wish you a good day and to be very careful today with the data. I always recommend not trading. Always remember the disclaimer running below me, okay? Obviously, these are not investment recommendations, but are only for informational purposes, let's say educational, for analysis, and they reflect our view of the market based on our platforms. I wish you a good day and a great weekend. See you on Monday.